Welcome everyone. Tonight I want to talk to you about a very serious subject. I've been watching these markets very closely, and as you all know, we opened sharply higher this morning and there was just relentless selling throughout the session. And this topic, markets on the edge of collapse, I mentioned last night in the broadcast that I believe this is very similar to 1987, and there's still a couple levels I will talk to you about tonight, but we are very close to the edge of a complete collapse here. And I'm going to try to address what type of things you might be able to do, but these are going to be very hard decisions to make. But it will be fairly easy if certain events happen, and there is some risk of whipsaw and all those type of things, but I just need to put this out there because this is too serious of a moment. In 2008, many folks that got to know me well know that I was very aggressive about how to handle the crisis of 2007 and 8. And it really started in July of 07 when Bear Stearns actually had the hiccup in one of their hedge funds. Actually, it ended up to be a mortgage fund. And the bottom line is, it was very easy to tell what was going on back in those days. And it was also easy to tell that everybody had the same problem or everybody had the same trade on. And what I want to discuss with you tonight is a couple things. Is one of the most concentrated trades there is out there is the advisory community. Everybody has basically the same 10 ETFs on. There's some variances, but it really doesn't matter. It's all the basic same trades, the same pie chart, the same everything. And, I've already talked to some advisors over the last several days as this market's been coming off. And I've heard a lot of folks getting calls from customers requesting to have more cash on hand. And, customers, people look at things like Riskalyze and other elements out there, other types of processes to talk about risk. And, they're always saying, if you let clients know that they have a certain amount of risk, they won't panic. Well, they do. It doesn't matter. The risk that every customer has is zero. They don't want to lose one dime of their money. And so when it comes to situations like this, they would err on the cautious side more so than being, locked into this ideology of buy and hold and all this kind of stuff that's out there. And so I don't want to get too deep into the subject, but I do believe we're very, very close to a potential major panic to the downside. I just posted a few minutes ago President Trump's press conference that he did on COVID-19. And, people are very uncertain about this and, it won't take much to tip the wagon over from here. It's already tipped pretty good. I talked about in last night's broadcast that we saw a substantial amount of stocks. I believe 60% of the S&P 500 right now is down 10% or more, and about 20% of them are actually in 20% or down, and then the rest fall into somewhere in between that. And the bottom line is these markets have already been rolled pretty good, and there's that sense of panic. I watched the market trade today. The machines are out in absolute, they're huge in what they're doing. And I've got some things that I've recorded. I'll do some more videos. I'm going to be very active here because this is one of those events that you have to be aware of. And if you're not, you're going to be sad that you didn't do something. So, okay, let's get to the point. The point is that we are going to be looking at a couple major technical levels, and I'll go through them in a minute. But if these levels are taken out, it's going to be no holds barred. People are going to push the panic button. And like I said, the concentrated trade is everybody owns SPY or some equivalent. Everybody owns the same trade. And one of the issues of the concentration in the investment area, and it's been driven primarily by advisors in this passive mentality, is that it also focuses, and everybody wants to know, I've seen so many stories about why the small caps and mid caps are underperforming the large caps. Well, it's really, really simple, folks. The ETFs are, for the most part, heavily weighted on the large cap. So all of the ETF investing causes the large cap stocks to get the flow as these managers are balancing these accounts out the best they can all the time. And one of the scary things is, as you go back to August 15th of 2015, we saw the SPYs of the world, the MDYs, and the major highly liquid ETFs actually declined by 60% in literally minutes. Now, they came back pretty quickly, but that particular event was actually an exclamation point on some things that had already been happening. And I talked about last night that this is a much different setup. This one is probably the truest black swan event that we have had. And that event is going to potentially grow bigger. Now, everything that the president said, you can watch that. If you didn't watch it, you can watch the video I posted. And it has real-time futures with multi-level liquidity meters, all kinds of stuff on there. So you can see how it reacted. Since the speech and the conference is over, we're seeing more pressure on the markets. And these things are just pushing closer and closer to that edge. So my suggestion is, if you're really concerned and the clients that you've talked to and they have these concerns, then do something about it. And I'll go through all the technicals here in a minute, but I wanted to go through just a setup here and understanding that this is a serious situation that's happening from a market event. I talked about last night that in 2 days, all the trends got changed, literally 2 sessions. And, we gap lower on Monday. We saw, big move down on Tuesday, and now we saw follow through today. And while the follow through was not that big as far as the percentages today, if you look from where we were, it's really big. So let's go ahead and take a look at the technicals, and I'll unpack this scenario much further. Okay, so we'll do a couple things here. This is the S&P 500 cash market here. And if you look up in the right-hand corner, you'll see that we're down almost 1% overnight again. We're down 26 handles on the futures. I'll show you what that looks like on the chart because I can actually demonstrate that overnight action. But right now, you see this. We're coming very close to the 200-day moving average, which is at 3,045.75. And I talked about last night is the big number is 3065. So we have a number between 3065 and 3045 is going to be the last stand. If it goes below that, then 1987 will be upon us. I believe you'll see an absolute panic and it could just really grow very quickly. So there's a couple things. I was trying to give you folks some ideas, but you could take some evasive action, maybe pull back 20, 30, whatever you're comfortable with. I would potentially sell if this market comes in like this tomorrow. And I would look to the close tomorrow to determine how I'm going to react to this. And my plan is to probably do another video tomorrow. It may even be intraday, and they'll be posted on the VPM Partners website, also be on the YouTube channel, the Kendall Report. So we're going to stay on top of this. So you can see that what I want to show you here is the PPMs are just collapsing here. I talked about that last night. Let's watch when I put the futures up here. The futures are down further, so you have one more bar. It's making a new low again. It's getting very close on the futures. The 200-day moving average is at 30.52. We're currently 30.84. We're down 0.83 on the night, and we're seeing that we're coming close to this number. But I want you to notice that all of the PPMs have turned a tick lower. So based on how they're trading right now, if the cash comes in like this in the morning, you're going to see more downward acceleration. And the last couple of times, you can look at all the points in time. I'll put a cursor here that, we bounced, went through the 200 and came back, but we've never seen this type of acceleration. And I talked about this last evening, where we saw the PPMs go from this positive number that normally gives you a 20 or 30% probability of it going below a moving average to all the way to the opposite. Now we're minus 0.89. This is the futures look. I'm going to go back to the cash. So I'm going back to the cash market. It's at 0.72. So there's going to be further acceleration if this thing stays down overnight. Hopefully it will recover. But the action could be taken with everyone else somewhere around 30.65, 30.45 is going to be the final point of defense. Break below that, this thing is just going to come apart. Let's take a look at the intermediate chart so you can see what the possibilities are. So the 40 period moving average is right where I'm talking about right here. So if we go over here and put this up here, you're going to see that's 3065.39. I just showed you on the daily the 3045 number is the 200-day moving average. This is the 40-week moving average, which is right there at 3065. But look at these PPMs. They are accelerating. I'm going to put the futures on the same chart now. I'll switch it to futures, and you can see we are right now right on the 40-period moving average. But you can see the PPMs down here below, I'll put a cursor down here, are actually failing. All three of them are failing simultaneously. They're all breaking through, even have broken through or are breaking through their first and second derivatives. So this doesn't mean anything to you. Let me just tell you what that means. When these type of events happen, these are the most powerful moves there is. So the next stop on this, if this gets taken out, you could argue that we would go down to 2,800, but most likely we're going to go all the way to the 200-week moving average, and that's where it bounced back in 2019 when we came in off that nasty fourth quarter of 2018. It went all the way down to down to the 200-week moving average. We could be sitting there right at this number, but I have to tell you, this is not a number you want to see, because this absolutely destroys the markets for a long time. And I mentioned last night that it's a possibility that we are playing with this generational high that I've been talking about for some time. So just know, those of you that maybe just following me, I've been doing this for 40 years. I've been through all the crashes going back to 87. I've successfully called these things ahead of time. And this is a real deal. I'm hoping that this thing holds right here, but it has to hold. If it doesn't, then there's going to be some real trouble, and it's going to happen really fast. And I'm telling you, I've been for years. I've been a individual stock guy. Our platform, both VPM 2.0 and Portfolio Expert, handles this stuff really, really well. But this is a black swan. As it stands right now, last Friday, everything was wonderful. Well, it's going to be Thursday, and it's not wonderful. The difference between a week is huge, and then looking at these numbers. So let's take a look at the monthly graph, and this will bring in the final perspective that I want to bring in. See this huge reversal bar. You'll also notice that the 10-period moving average flattened out here a little bit, and that tells you in itself it is becoming vulnerable to a downside move. The next level down, which would be the 21-month moving average, is 28.93. That was the number I was just talking about in the 28 handle. And then the next number is 27.30. So we're looking at a substantial move, and it will get triggered. And I don't think there's going to be any bounce in here. And whether, there's a couple things. I'll say this. I think I mentioned it last night. If I didn't, I'll say it now. But there's a couple of things going on. The coronavirus is part of the emotion is coming out. But with the rising of Bernie Sanders and the potential for a socialist, everybody said Trump couldn't get elected last time, and he did. What if, and I think the markets are doing the what if Bernie Sanders got in, this market, the S&P is going back to 1,600 or 1,200 if something like that happened. This entire infrastructure from a corporate viewpoint will be destroyed. Okay? That's all there is to it. There's no way that the United States could ever become a socialist environment and survive this. So hopefully that's not the case, but the markets are starting to think about that. So maybe you think that's far-fetched. I happen to don't believe that is what happens, but it's what I talked about last night. It's the perception of what market players think could happen more so than anything else. I'll give you an old quote from one of my mentors, Chicago Board of Trade, 1979. This guy, one of the bean traders, told me this. He said, just remember, son, he goes, the price of soybeans are made in the mind of men, not in the field. And what he meant by that is fundamentals are bullshit. And when it comes to emotion, that's what's going to drive the market much further up or down than you ever imagined that it could. And in the world that we live in today with social media, and you got algorithms looking for keywords, generating buy and sell orders off of keywords out in the world, there's so much stuff going on out here. This thing would be a feeding frenzy. And I will record some of the activity tomorrow and actually show you what's going on and how you can tell when you hear me go, oh, the machines are in there again. I will show you what machine activity looks like in the markets. And none of this is healthy. And in the bottom line, these traders are interested in one thing and making money. They don't care about the markets or anything. It's not like the old days when I used to stand in a trading pit and look at my best friends and trade with them all day. It's not like that anymore. The digital world, the anonymous world, it's like a giant Twitter account. Everybody becomes a troll at one stage, and it's everybody for themselves. So anyway, I've babbled on about this, but you can see what's going on in these charts. Please make some hard decisions and let your clients know that if you make these decisions, we may have to reverse them, but to do something is better than doing nothing is all I'm adding here. And I'm not trying to add to the panic, but the numbers, that 2060 number, 2065, maybe 2045 will be the bounce. But even if it bounces, this is the end of February. This is a disaster. There's no way to frame it. And I thought long and hard before I did this broadcast on what I was going to say. And it's really important that you do something. I was quoted, and I saw some old posts from 2008. Somebody had quoted what I said to a very large advisor in the industry, and I told him it was the day after Lehman failed to sell everything. And sometimes these events happen, and it was the same comment. You can always get back in. If you lose people's money, they're not going to be very tolerant. And, this is the tipping point for the industry. So if you're an older advisor, I think it could tip the whole markets over everything if something really bad happens here. So let's hope. But as one of my other old mentors used to say, hope is never a strategy. And so you have to be able to react to what's going on here and don't mess around with this market, because it could get ugly so fast. There's not going to be reaction. Remember the flash crash back in May, I think it was 2010, I think it was, maybe 11. It's been so long ago. But these things, that was a flash crash. This won't be a flash crash. This will be a material number. And just one thing I want to add, what's going on in Europe. Europe's already on the edge of a recession, okay? And this is exactly why this thing is even more risky. Everybody, I saw at least, I don't know how many posts today, people going, don't buy Chinese anymore, bring our manufacturing home, bring our drug manufacturing back here. There's senators. This is going to be, in my opinion, it won't happen overnight, a major event on the planet, and restructuring what gets done and where it gets done and who gets trusted. It's just no way to get around it, especially if anything comes close to the events that I'm talking about. Anyway, best of luck to you guys. This thing gets out of hand tomorrow, I will light up the screen. I will. I actually moved my studio. I'll have to see if I can get it so I can do a live stream. I don't think I can do a live stream from the software that I'm recording on right now, but I will put something up and get it out there for you folks as soon as I can. Best of luck to you. Talk to you real soon.